Hello, ladies and gents, and welcome back. Lachlan Ellsworth here. What I want to do is take you through trend measurement. Now, I say that having just run around Australia and New Zealand and done the Back on Track intermediate trading series, I noted that there were a lot of traders out there that were having a little bit of trouble actually measuring the trend or understanding the mechanics behind measuring a trend, which is actually more important. Now, why is trend measurement so important? It's so important because you need to ensure that you're not taking first against the trend signals. Now, a first against the trend signal, obviously it's the first buy or sell signal against a trend. Okay, so we need to know, one, how to measure the trend, but also based on that we need to know how to not take the first against the trend. Also, a beautiful thing about being able to measure the trend is once you are in a trend, then the only signal you're actually looking for is in fact a continuation buy signal or a delta trade. They're the only ones that you're looking for. So let me run through the mechanics of it. You'll note that the time frame here, I just grabbed a chunk of S&P chart. I grabbed it around about 7 o'clock this morning Sydney time. And again, I want to go through the mechanics of the trend measurement just so you know what to look for. Now, first things first, let's start down the bottom here on the left-hand side. You'll see we've got a low point of price movement. That is where we start to measure our trend. Now, as we stair step higher, what I want you to do is focus on the zero candles, because it's the zero candle and the DS swing that actually gives you the price candle by which you measure the stair step. So you see here I've got a zero candle just underneath this arrow, and I've literally drawn a black line across the chart. That is my stair step 1. Now what I then do is wait for the next DS oscillation. I get another zero candle and I measure my price from there. Now I've been a little bit cautious here and I've actually gone for the lower of those two prices. Now what that means is we've actually got a double bottom in price, which will allow a trend to actually be established. Now we move up here to this zero candle, and that corresponds to stair step number 3. Okay, we move higher, zero candle, DS oscillation or a DS valley there, stair step number 4. Then we move higher to stair step number 5. So what we're doing is for each of these corresponding zero candles, we're actually making a stair step higher and higher and higher and higher. Now, you'll note here as we move across to the next DS oscillation, call the black line here stair step 6, what we've actually done is created a double bottom between 5 and 6. Now, if we were in a trend, that would actually enable us to continue trading with the trend. Okay, so if we were actually in a trend, then we would be looking for a continuation buy signal. Now, at this point in time, we'd only actually moved up around 2.75 points. So even in the pre-market, this is not a trend. Now, we actually topped out up here at 3 points. So again, we're in the pre-market, we're looking for 3.25 points. In the cash market, we're actually looking at 5 points to be in a trend. Now, let me just grab a line tool for you. I'll grab a line tool and actually show you where we physically measure. We measure from price low all the way up the top here to price high. And you'll note that the price move actually started at 11.01. It went up to 11.04, meaning we are only 3 points into the move. Now, because we're not in a trend, this big picture sell signal that's actually setting up quite nicely here, and I've marked it for you literally using this arrow, that big picture sell is a legitimate big picture sell. It is not a first against the trend because we're literally a quarter of a point from being in a trend. So this is a great example of not only the mechanics of how we measure a trend, but also the fact we've been saved by the bell, literally by a quarter of a tick. Now that's why we have very, very stringent rules about when we're in a trend and when we're not. If this had have gone to 3.25 in the pre-market, then we literally would not have taken that big picture sell because it was then a first against a new trend. If we do get into a trend, the first thing we're looking for is actually a continuation signal of that trend. Now, as it turns out, this big picture sell ran down a little bit into profit. I mean, it only went down a point into profit. Interesting thing for those that are watching the DS fatigue, you'll note that this actually did bop down for around about a point into profit. And what happened? The DS actually fatigued into the red zone down here under 10, literally down the bottom here. Now, on the way up, for those that also went to Back on Track, you'll note with interest, DS fatigued over 90. And we traded sideways just here in the middle of the picture. DS fatigued over 90 again. What did we do? We traded sideways. DS fatigued over 90, we traded sideways, and then the sellers came in and took advantage of the market. So that DS fatigue, for those that are new to trading, is a really, really good guide as to what the market wants to do. All right, now that's stair-stepping, or literally trend measurement. And what we'll do, ladies and gents, each week is we'll add a tuitional video to the Trading Academy trading channel, so you can actually just stay fine-tuned on your trading and so on and so forth. The index I've picked on here is in fact the S&P 500 from around about 7 a.m. this morning. Great example of a little trend or a little stair step up there. And again, what my intent was to show you the mechanics or the method by which you measure that stair step. Ladies and gents, thanks very much for your time, and watch for a weekly update on different trading tips and different ways that you can take advantage of the market. Have a great day, and bye for now.